Most South Africans will lose millions when they die, not because of bad investments, but because of taxes and fees they never planned for. If you own property or have significant savings, this matters to you. We plan weddings, we plan holidays, we plan retirement. We watch videos on how to invest smarter and build wealth, but almost none of that advice covers the event that can derail everything: death. It's uncomfortable, but it's inevitable. And in South Africa, it can be expensive, but you can make it easier by planning for it. A basic burial costs between 20 and 40,000 rand. Cremation is around 10,000 rand. The funeral cover might pay for that, but it's a short-term problem. The funeral costs might be covered, but the real financial hit starts after the funeral. To explain, let's look at an example. You own a house worth 4 million rand. You bought it for 2 million rand. 2 million rand in shares, you bought it for 1 million rand. And you have a business worth 5 million and you have a base cost of 1 million. Base cost basically means what you paid for an asset, plus things like transfer duties or renovations. SARS uses the base cost to calculate the capital gains. That is the profit you made after the base cost. So let's say your total estate is 11 million rand. Now let's get to the calculations. Capital gains tax first. When you die, SARS treats it like you sold everything the day before you died. On your house, you have a 2 million rand gain, but you have a 2 million rand exclusion for your primary residence, so no capital gains tax there. Your shares, you have a 1 million rand gain, and after the 300,000 death exclusion, 700,000 is taxable. In your business, you have a 4 million rand gain, that's fully taxable. That's 4.7 million rand in total capital gains. 40% is added to your taxable income. That's around 1.8 million rand taxed at 40%. You owe about 846,000 rand in taxes. So estate duty next. So your estate value is 11 million minus 3.5 million that you get an exemption for. And then there's a 7.5 million taxable amount. And the estate duty on that would be 20%. So that would be 1.5 million rand. Now let's get to the executor's fee. If you've not negotiated your executor's fee, this could be as high as 3.5% of 11 million rand, and that's 385,000 rand. If you add that, you get about 442,750 rand. So the total is about 2.8 million that's gone before your family sees a cent. The problem is that most estates don't have cash ready, so the assets have to be sold, often at the wrong times and under pressure. Now think about lost income. If you earn 80,000 rand a month and you die tomorrow, your family would need at least 75% of that to maintain their lifestyle in most cases. That's 60,000 rand a month. So your monthly need is 60,000 rand. And we assume an income growth for you at 5% a year, and let's say you get an investment return of 10% a year. When you use those assumptions and you use a present value calculation to give your family money for 5 years, you need about 3.2 million rand today to fund those payments. And for 20 years, you need about 9.3 million rand today. And your funeral cover won't even make a dent in this. So what can you do? Firstly, get a valid will. 3 out of 4 South Africans die without a valid will. Review your life cover. Ask yourself, will it replace my income and be able to settle my debts? And make sure that you have liquidity at the right time. There needs to be cash to cover your taxes, fees, and living costs for your family. Your family will need money long before the estate is finalized. And make sure to know how your policies will flow. Funeral cover needs to go to before the funeral. Life cover needs to cover the income for your family and should go directly to them. And the estate liquidity should cover taxes. Make sure to name beneficiaries on your life cover. Direct payouts from your life cover can bypass the estate and executor fees. So it will take a lot quicker to get to the intended beneficiary. Consider creating a testamentary trust if you have minor children. And work with your financial planner and your attorney to make sure that you have a plan that fits your family. Preparing for death isn't grim. It's a way to care for the people you love. And in our practice, our goals is to align your goals with your money to make sure that you and your loved ones can live fully.